In Saturday's video, we were really talking about why we were bullish at certain times at these lows, but I wanted to talk about the fact that this still could be a bear trap, I would say, with just a little bit of an edge to the bulls, especially on this daily chart right here as we break through resistance. So we need to pay attention to the risk, right? That's something I like to do as a trader is, at least for me, I can't speak for all traders, but I like to be very aware of the risk almost at all times. And there are risks in this overall move, and that's why we have to go into the shorter time frames to really point those things out and see if there is credibility to those, to see if we need to react early on in the week if we are still holding on to some bullish trades from the overall little head and shoulders that we saw down here on the 30-minute chart. So that's what we're going to get into today as we get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, looking over at Meta, Microsoft, AMC, GME. We're going to go over those for a brief moment because there's not a ton to go off of, and that's the main point there. But we're going to go over a lot of stuff. We're going to pop into a few things afterwards to show you some of the signs that, hey, we could see some kind of trap in this area. But let's just pay attention to what really happens with the price action, because the most important thing to pay attention to when trading stocks is just, hey, are more people buying here? Are people selling here? Are more people buying than selling? If we have a bullish trade, are people selling more than buying if we have a bearish trade? And that's something very important to pay attention to. So let's get into it. First off, with the SPY, we already went over, hey, the daily chart's curled up and does not look like it's pointing directly towards the monthly expected move. And we do have an updated weekly expected move for you for this week, 607.22 to the upside, and we have 587.94 to the downside. Notice exactly where that weekly expected move, very, very important. If you are new here, this is our 68% zone that we do calculate using the options data that creates this 68% zone of where the options market is pricing in a move, high or low, to go for the SPY. And we give that out every single Sunday. So I encourage you to subscribe if you like this information. Stick around for a few weeks and you'll see that a lot of the time we gravitate to one of these moves. And if you're paying attention to signals correctly, hey, you might be able to catch a good little trade setup. Now, first thing I want to do is just look at the 2-hour chart. Now we can see that a lot of these times that we did see these upward moves, right? We saw the 30-minute divergence, we get that upward move. Okay, awesome. That was a nice trade. We hit a weekly expected move in this area, so we were aware of the risk. Now, did we think that was just going to plummet to the ground? Well, we were aware that this was behaving a little bit like a bear market here, and we just experienced a bad drop, so we may want to go and retest the breakdown area and fall down lower. So we're paying attention to these times because they've been great little setups, right? They've been great little setups. We're going to talk about those in a minute, but that means we should still be aware that this 2-hour can cross. Now, the difference here is the 2-hour is more into positive territory at this moment for the MACD, meaning this is a pretty damn good positive trend at this moment. So what I want to do is point out the daily expected moves, 670 to the upside and 594.46 to the downside. So the two very important levels actually for the SPY are going to be, for this week, I believe, is 590 and 600. Those are going to be two very important levels, and notice this would take you above that time. So we're paying attention to this high, seeing if we can get above it. If the 2-hour crosses, hey, we still don't like that, but that actually has more credibility to be a pullback with where the weekly expected move is and how the positioning of the MACD has taken you pretty positive here. Are there any signals that really tell us a drop is coming? And I'm really going to go through this just to explain why I thought these were better opportunities than, say, shorting at the high towards that weekly expected move. Well, we can notice something here. Down at the lows, we actually saw a lot of things give us little divergences. Most of the time it was at the same time, right? Some of the divergences we saw in the individual stocks actually showed at the same time. The SPY didn't, but we still believed in that. And we actually had some moves down in these areas to give us some credibility there. And we noticed the big rejection divergence, the dip down to retest that. It was just fantastic. This one here, you have a 30-minute triple divergence and boom to the upside. This one over here, you have a 30-minute divergence and boom to the upside. So why were these overall a little bit more difficult? Because notice you don't have the MACD and RSI at the same time at all until we get to this point here. So we're going to talk about that, but this is why overall did not take these short positions, because these could have just been pullbacks in some way. You're not necessarily getting the best weakness and momentum signals up here. You don't see it on the MACD for this one. You don't see it on the MACD for this one, but you'll notice that you do see it on the RSI for this one. This one here, you actually don't see it on the RSI either. So very interesting. We had to be paying attention to the data and where that weekly expected move was as far as risk goes. because we knew that as we approach that weekly expected move, hey, there is risk that we see some kind of turn down from that area, right? We don't want to treat it like, hey, this has to hit this line. We want to be like, hey, what does this look like? Is it turning down a little bit before there? Okay, awesome. So why am I talking about all this? Well, because look at the structure for now, and I want you to look at that MACD. We actually do see a divergence here on the MACD for the 30-minute chart for the SPY. And we see that blatantly on the MACD, and that would normally say, hey, this has a good shot. This has an opportunity to potentially break through that 5 and actually end up making some kind of downtrend. So we should be very aware of that. The only problem is, again, you do not see it at the same time on this RSI. And I'm going to blow up the RSI so you can really see this. It is not at the same time, again, on the RSI. So you're getting another complicated thing going on here. The only difference is you have curled up a daily chart with this price action. You have broken through a trend with this price action. And you might get some kind of 30-minute drop that just turns back up. You've shifted the weekly moves up here. And that overall really can help you in understanding, hey, are we in a slight uptrend moment for the time being? Yes, you technically are. But the risk is here, and we do see that 30-minute divergence. So we should not be surprised if the 30-minute keeps pulling back and we go down into a daily expected move on Tuesday, right? Because we have a day off tomorrow. And then if that can curl back up, hey, that's great. But if that keeps dropping and the 2-hour actually crosses, it means we actually might head down to a weekly expected move with that 2-hour cross down. But we already pointed out the 2-hour is relatively positive. Now, something else I wanted to show off for the SPY was this is a Trump event, right? And the last time we saw some good news from, or some good price action after I would say, Trump event was actually the election. The election actually showed that 30-minute divergence we were pointing out. This is where I was short actually in these areas, started to build that short position just in case. And then we saw that drop down. I actually got rid of my short position just because of this setup. I said the risk is too high. I can always trade another day. Stocks are going to move how stocks are going to move. I'll find another trade setup. And I'm glad I did that because there was a major gap up. But notice you had a reversal signal at the lows. This time you technically, before a Trump event, have a reversal signal actually at a potential high, some kind of, intra-trend high, if you want to call it that. You do have a type of reversal signal here, so you want to be aware of that. That is the overall risk. So something that actually would be good for the market if it wants to remain bullish is just go tag that daily expected move. Maybe even dip through it a little bit throughout the day, connect with this 5 coming up, and then get that retest. And if everything's good and buyers step in, right? Buyers have to buy it at that point. For a stock to go up, you got to have buyers step in with some money. And if that can curl up into positive territory, that can keep going. Now, as we switch over to the Qs, we just want to pay attention to the fact that look where you're at. You're at these key levels. You didn't have the divergences at this time on the MACD and RSI at the same time. That's why these plays looked a little bit better to me, right? Now, this one was a little bit skeptical. We can go over that another time. But for the weekly expected moves for now, you have 532.78. Okay, to the upside, and then you have 510.70 to the downside. So 68% zone calculated by the options data, not a 100% zone. You 32% chance to land outside of those moves, and that's where you can see some crazier stuff. But I wanted to point this out for the Qs. Are the Qs actually hinting that there is weakness here? Because you do have a 30-minute divergence and the daily chart hasn't curled up just yet. Because you have 30-minute divergence, you're bumping your head into the little trend line between the two recent highs here where we've run into problems. You see the divergence confirm at the end of Friday, and look at the RSI. It's a little bit more, hey, it's actually there in some way. So we're paying attention to it because this has more credibility to say there is a bigger downturn coming. So what does that mean? I'm still going to be paying attention to 525.35 to the upside and 518.13 to the downside for Tuesday because those are my daily expected move. This is our 68% zone for the day, right? Using the options to calculate that. And if the 30-minute wants to dip down, hey, that's perfectly fine. I'm fine with that dipping down as long as it ends up curling up. It might mean, hey, I need to manage in case I do have bullish trades because this is a divergence, right? This is a potential short signal at this point. And if we would have got those up here, we probably would have been taking shorts, but a little more complicated at the highs. This one doesn't look complicated, so something that would be good for this is to get rid of it and see some kind of squeeze right away. We'll see if good news comes after that inauguration. But right now, it is suggesting that we need some kind of 2-hour pullback. Now, where would that 2-hour pullback come from or go to? Well, we have a weekly expected move for that, and we can pay attention to 5-10-70, right? If this 30-minute is saying we're going to see some kind of 2-hour pullback, not some kind of 2-hour collapse, that can still happen, right? Bad things can happen. So we want to pay attention to if that 2 hours curled down, that would not be bullish anymore. That actually would be kind of bearish in a way because you're still pretty close to the center line, actually closer than the SPY for the Qs. So I would be very aware of this. And if the 2-hour can curl down, what's the most likely thing to happen around this weekly expected move? Even if we cut below it and go fill this gap, you could end up turning back up into positive territory because this is our 68% zone. So we'll pay attention if that is happening early on in the week. But this is something key we have to look at because you do have some kind of reversal signal up here. You do see it a little bit on the MACD, a little bit wonky on the RSI, but it's still there. So let's pay attention and not be surprised if things need to pull back, maybe to retest a 5 or even to go fill a gap below a weekly expected move next week. If you really want to get rid of these signals, you might see a 30-minute curl down, and then I think you potentially have to squeeze from these levels. Now I wanted to talk about a stock that is suggesting that this isn't some kind of trap, okay? I want to give you both sides, and then you can weigh all the things according to risk and see how price is reacting, and then maybe you can react, right? I'm just giving you the overall input of what stocks are saying, and Apple is saying something very interesting here. If you're part of Patreon, you know why we're paying attention to Apple, and you know exactly why. Well, technically, I think I said the 1-hour chart was the cleanest. I always look for the cleanest chart, and we notice that the 1-hour chart here doing something interesting, getting a little curl up here with divergence on the MACD and the RSI at the same time. And what have I been saying? I've been saying, hey, back in these areas, hey, if Apple could really start to participate, this market could actually squeeze. And notice that it dipped down again. Well, what's the key thing about these dip downs? Well, they happen to be at a monthly and a weekly expected move. So you are outside of a monthly expected move. I'm sure Patreon members have been paying close attention to Apple, and it looks like a risky setup. This is a very risky setup because Apple is doing some terrible things at this moment, but we do see some interesting things from the chart here. We're trying to form a little higher low in here. We're trying to get that back above the 5, and we'll see if that happens, but Apple is suggesting that a downside move here could be a flush, right? But the chart itself, the indicators right now are suggesting, hey, this is actually creating a bottom and Apple is about to head in the upward direction. And we have new updated weekly expected moves over on Patreon for stocks like Apple and all the stocks that we cover and more. So go check that out if you have time today. Maybe just do it for 1 month just to check it out, right? Try and see if it helps out your trading because Apple is saying something here. And if this is saying anything according to weekly and monthly expected moves, it says Apple might do a little catch-up play here and try to test these levels in here, maybe even break through. We'll see if that's able to happen. But for now, we just want to be paying attention to the fact that there is divergence here, which is very interesting because Apple is a big stock, and we just showed off that there's 30-minute divergence on the SPY and the Qs. I believe it's even on IWM and DIA at this point, saying these things all need to pull back. Well, Apple is telling the exact opposite. And what were we talking about over the last few weeks during all of this kind of, volatile time? We were like, wow, this really looks like bear market behavior. And once if that daily chart's able to curl up with some good 2-hour divergences, we could see a squeeze. You know what could cause a squeeze? If Apple is giving us a sign here that says, hey, I'm going to curl up now, I'm going to participate, which might mean some other stocks actually pull back, but maybe Apple sees a little bit of a boom here to really help the market remain at higher levels. So I thought Apple was a very interesting thing to point out to you guys. And it really looks like a good signal. And I'm very hesitant to say, oh, the market's going to experience some kind of big drop when Apple is showing such a good reversal signal right now, and you do have a form of confirmation here at the moment. So we'll see if that continues. You guys know that I do like my 2-hour charts better, and that has not confirmed. So just to be clear here, Apple has not confirmed the divergence on the chart that I like to see. I think there is great strength in 2-hour charts. If you've been here for a while, you know how I like 2-hour charts, and we do see that divergence on the RSI, on the MACD at the same time, holding every point of divergence. It looks like a great signal with a stock that looks really, really bad right now on, say, daily charts or even the shorter time frames. This is very deep into negative territory for a lot of things. But why would it be showing us this outside of a monthly expected move, outside of a weekly expected move last week, and coming back into it at the end of the day? It just adds some validation to we could actually potentially see a squeeze. And that's why I think, Tuesday, Wednesday might be very important to see because Are we going to get that squeeze, or is this a trap and Apple's going to see some kind of big flush here? We'll be paying attention. Tesla giving some validation to, hey, I've gone up for a little bit. I might need to experience a pullback, maybe to retest some stuff, maybe to fill a gap. Look where that 5 is. It's right where the gap is. Maybe it's just a brief little 30-minute pullback. We'll see, but we do have a flat divergence at the high, no divergence on the RSI as of right now. But this 2-hour has been gunning for a little bit of time here. We did reject the cross down right here. We talked about the 30-minute divergences for that 2-hour to turn up again, to reject, and that's fantastic. It is a great reaction from Tesla. We'll see if this can continue in the upward direction. If the 2-hour does cross here, I just want to pay attention if it starts to cut out at these levels, because we could end up down towards 357.78 pretty quickly here. Notice this about Tesla. If we're really being patient, right? If I don't like those shorter time frames and I'm really just being patient, I'm looking for a good 2-hour signal, maybe a higher low, but also I'm looking for if the daily can curl up, and you're not necessarily seeing that from your MACD. You're seeing it on a lot of RSIs if you add that signal line on there, and the fit in the center line, a lot of things going above the center line. So that would tell us that momentum is overall pointing in this direction, and we should pay attention to that, but we do genuinely have some kind of flat divergence here on the 30-minute, which means we might go through a brief pullback period early on in the week, unless we're able to actually gap up or something like that and just see this thing squeeze. So we'll be paying attention to it, but always weighing the risk. This means that, hey, if I have, very short-term calls on something and I see a signal like this, usually that is enough to convince me, hey, I might want to be taking profit in these areas, because I don't want to be in even the risk of this happening. I could be wrong and it could completely go into the upside, right? Stocks can do what they want to do, because if some big buyer steps in and this just goes up, awesome. But if I have a short expiration, am I really going to hope that a big buyer steps in, or am I going to pay attention that sellers have actually taken a little bit of control here? I've gotten a confirmation that momentum is starting to shift down and that divergence looking pretty flat across. I have divergence. I have sellers stepping in for a moment. There's a lot of risk with Tesla actually making that downward move, but we'll see what happens with this bad boy going forward. Amazon is the one that we really liked. I really liked Amazon. I'm still holding on to this thing, but did I take profit in some way? Of course I did, right? This is a great upward move, and I'm taking profit every time I see these little highs in here. I'm taking a little bit of profit, leaving those runners, right? Leaving some runners, and that's fantastic, because all I see now is, hey, there is a flat divergence on the MACD, and there's a flat divergence, if not a little bit down on the RSI, which says, hey, we could see a 2-hour pullback. Now, that is close enough to negative territory to make me a little bit worried. So if I do see a 2-hour cross like down in these areas, I won't be holding on to any contracts. Most likely, if this 30-minute is able to go negative, we see no support at the 5 whatsoever on Tuesday, I'll most likely be out of my calls at that point. And that's just because this could be some kind of pullback, but because there is some kind of flat divergence and it's on the RSI at the same time, it means Amazon could go through a little bit more trouble here than other stocks. So we're paying attention to that. But, for Amazon, this is pretty good overall. The daily chart has not curled up. You're overall in a flag, so you'd kind of invite this to curl down for a moment and then be able to cross through. So just be aware of that. Little intraday pullbacks are nothing to be worried about. If it's just a test of the 5 and we curl back up, hey, it curls back up into positive territory, you're still in a positive trend, you might still be squeezing at that point. So Amazon is one that I would keep my eye on. There are risks in this area. I will tell you this a lot about short squeezes. They make a bunch of divergences, and those divergences kind of give you sideways price action or pull down a little bit dramatically for a second, and then a lot of the time they whip back up. So that's something I'll be paying attention to, and I'll be looking for that during the live video to display that to you guys if that is taking place. If we're starting to curl down 2-hour charts, that's when I'd be a little bit more worried for a lot of these stocks. Nvidia, once again, we have weekly expected moves, and if you're having trouble understanding what we're talking about with weekly expected moves, the course is down there in the description. It's 90% off. It's only $100, and you could take the full technical analysis course down there, and it's really good at describing like how, and I'm just saying that because so many people have emailed me just saying thank you for putting it out there and allowing them to understand like, hey, what are these weekly expected moves? How do you calculate them? And exactly what should I be paying attention to around those areas? Those are all good things. But Nvidia, let's really get into this because Nvidia is very interesting. Nvidia actually showing 30-minute divergence right there, right? We see that actually confirming, not on the best bar though, and you're kind of flagging out at the high, so very interesting. But we're seeing that curl down, so that divergence technically has confirmed in not the best confirmation, I would say. It's still below the 9, it's above the 5, but you do have a bar actually closing below the 9 on the 30 minutes, so I'd pay attention to. If a 2-hour can pull back. And the thing about the 30-minute that I glossed over was the RSI is showing it as well. So just pay close attention. It's interesting to be flagging here. We'll see. People are pretty bearish a month out. We pointed that out during the live show and I think in the Saturday video, just mentioning, hey, people have a lot of bearish bets going into February, so just pay attention to that. Something here that's good. Hey, the 2 hours trying to go positive, but that 30-minute divergence could mean that that's a failure, and maybe Nvidia needs to make some kind of 2 hour divergence down by 127.74, or maybe a weekly expected move, right? I can get that on Patreon, and if I see a 2 hour divergence by the weekly expected move and that confirms a buyer steps in, I'm pretty happy with it. So we might end up seeing something like this. We'll see what takes place. That's what the 30-minute is mostly suggesting in this area. The other option is, hey, you're just going to see that go away with some kind of move to the upside, and you're going to see this daily be able to curl up into positive territory, and this will actually confirm itself as a higher low, which means what? We always have that opportunity over the next few weeks to test this high or go make a new one, as long as we don't see any sell signals in here at any point. So that's what I'd be paying attention to for Nvidia. Meta, you might be looking at the daily chart going, what the heck is going on here? Is this some kind of continuation thing? Are we getting tight, ready for a big move? I think that's what's mainly taking place here. The good part is you're holding up at higher levels. Your monthly expected move still has some room to the upside there. And if you really go into a shorter time frame like the 30-minute, you're just going, okay, this is kind of just sideways. Yeah, we saw some craziness with Meta for the most part, but it is ending up sideways. So if this 30-minute can get a strong confirmation up and not see any wonkiness, you can see another upside move. But I've said this about Meta a few times. We thought Meta was one of the best opportunities down here, and then once we actually got to that weekly expected move up in these areas, it's gotten a little bit more complex. I mean, you would say you had a high. The next time, I mean, this would be very, very difficult to short. That would be a guess at this point. But once you did this and you made that lower high, that's what I want to be paying attention to. That actually could have convinced me to potentially take a position, because you are making that lower high, meaning you can take out these lows, and that's exactly what ended up happening. So Meta, do I think it's the best opportunity? Do I think it's the cleanest thing in the world? No, I personally won't be trading it. I think there's things that are a little bit cleaner to it, but I wouldn't be sleeping on the fact that Meta can make a decent move here. Now, that could be up, that could be down. I'm sorry to say it, but that's the truth, because actually there are some questions out there if Meta is actually trying to do something with the whole TikTok ban right now. So I would be aware of that if I was someone who was trading Meta a lot. Microsoft as well, giving that 30-minute divergence. So as you look through these, it seems that Apple is the one stock saying like, hey, we can squeeze to the upside, while all the other ones are actually proving some sell signals here on the 30-minute, mainly just saying, hey, we could see a 2 hour move down. And these 2 hours have started to go positive with some big divergences. So you can experience pullbacks. Can those pullbacks be big? Yes, they can. I mean, you reacted to a key level. For Microsoft, this is good at displaying it, so I wanted to talk about it here. We can see how that level is very important. We can see how there is a left ahead, and maybe we get a deep right shoulder to really fake people out and even come and fill this gap. Now, do I think that that would be, you know, the best and most bullish way to go higher? Probably not, but do I think that would be the way to fake everyone out? Yes, and we know that the stock market is pretty much behaving right now like it wants to hurt the most amount of people possible. So I'd be open to a lot of scenarios here, and you do have a 30-minute divergence from Microsoft suggesting that this 2 hour can see a pullback, if not some kind of pull down, because you are pretty close to negative territory. So I'd just be paying attention to that. On the daily scale, we can notice that this one has not curled up either, so we do not necessarily feel safe in saying, hey, yeah, this thing is definitely going to the upside, right? Or this thing has a higher probability to go to the upside. We've made the base, but we need to confirm the actual signal saying, yeah, it's kind of go time for this daily chart. And that's what I'd be watching for Microsoft. AMC, once again, not the best structure here. So really, this would be a random occurrence if you start to just see like a massive squeeze out of nowhere. This would be a very random occurrence. And we know that the last squeeze, I've gone through that multiple times and noticed there were a lot of good momentum signals before the last squeeze. And this one, you don't have them right now. So this is interesting. We'll be paying attention to it. You don't have daily divergence anymore. You really wipe that out. So that's all interesting stuff. But the real important things you need to know about AMC this week are, is there going to be an opportunity? And I don't see an opportunity at this moment. Now, 412 is what you need to break through to see something crazy. So if you want to see a squeeze, you got to get above 412, and that'll be very important. And that's really where the fight begins at this moment. So if we wanted to dip down lower, this thing's been ripping back and forth, right? Huge move down, nice little rebound, but is that just an ABC to head lower? And this is something I'm paying attention to. Can we actually make a 2-hour divergence here? Can we see some kind of drop that does this and turns us right back up? And that's why we have weekly expected moves for AMC, the downside move if you need that on Patreon. But that's really all I have to pay attention to. I want to wait until signals look better. And the same thing goes for something like GME. We see that even if the 2-hour was able to curl up, is that the best look in the world, or could we just go to a weekly, could we just fail that at some point and then actually give a signal? You do not have any really good basing out structure. You just see price kind of getting tight, some tapering in there. Those are good things. The important level you need to break through is 30.09, but it's just, you know, if that 2-hour curls up, you're so negative that another curl down is very, very likely. So I do believe it would be kind of a random occurrence if we actually do see some kind of massive squeeze like right now. So the 30-minute here is the only thing that I could find that is actually showing reversal. So that was actually proved by a big buy. So that's interesting. We'll see what happens. So GME a little bit better than AMC because the tapering that was allowed to happen here with all the price action after the big drop actually did give you that divergence. But the reason that I was pointing out the 2-hour first was just to say this divergence is all happening without the 2-hour having a strong base, and the 2-hour is very deep into negative territory. So that doesn't mean this has to be some kind of massive move. This could be some kind of rebound to retest 28.35 and then end up curling down again. And if this would happen, we might be talking differently because your MACD might look a little bit like this. That would be a very good signal at this point. So GME, you do have a 30-minute signal. Hey, it's got a chance to do something crazy. I think, you know, as long as it has a little signal behind it, I'm not going to hate you for doing something with it. But the 2-hour is something that I really like to see from stocks, to see a strong base at that point, see some kind of 2-hour higher low, see some kind of 2-hour divergence. Those convince me a lot more that this is a strong base. At this moment right now, it looks like, hey, this is a strong enough base to make a 2-hour move up, but that 2-hour move up could easily fail with the positioning of the MACD if like a couple big sellers come in. So that's what I'd be watching for GME. I did want to flash over to DJT, not to really talk too much about it, just to point out the 30-minute divergences that have all popped up in here. Very interesting look. It's telling us that the 2-hour could turn down. Overall, the 2-hour has turned down, and it is still in positive territory. So even if this wanted to go retest the breakout in some way down towards, I would say 36.50, that wouldn't be a bad thing, right? That can reload to get some buyers, and then if you just turn up into positive territory, hey, you're still in a positive trend, which means you take out this high, you go make a new one. If you are planning to trade DJT, if you already have a trade with DJT, I highly suggest joining the Patreon. We are putting out weekly expected moves for DJT, and this thing almost has like 200%. I haven't seen that for DJT in a while. DJT does have high implied volatility, usually anywhere between 60 to 140% every single week, but right now it's up towards 200%. So you've got to have some good levels to pay attention to, because most likely price action is not going to be good enough to tell you where those levels are at this point, and options are going to be a big thing for it. So options data might be able to really help you out, and that's what I'm pointing out here for DJT. We'll see what happens, but the implied volatility is saying a big move is coming for DJT this week, and we'll see what happens. If you are someone that's paying attention to volatility, martial law, and martial law is someone that comes into the live videos, he likes to trade volatility. Something that we want to pay attention to is the fact that you do have 30-minute divergence here, and it has confirmed, right? We have confirmed, we have held that signal, little tiny flag in here, still holding the signal at this moment, saying what? Saying the 2-hour can cross up. So immediately, does this signal mean, oh, volatility is just going to come back and this is going to be insane? Not necessarily, right? We actually do see on the daily chart, we're starting to close below the 200. So that's interesting. We're actually crossing down on the MACD. Those are all actually bullish things. So this more so means to me, as the 2-hour is very negative and crossed up, that a pullback is very likely on Tuesday, unless we're going to get some good news and squeeze, right? Something really bad happening seems to be the less likely thing to happen at this point. That's just what I'm trying to get across here. It more so looks like these things could produce, big volatility, but it is leaning towards the other. And it's not to say that the big volatility coming in, some big kind of crash happens is impossible. It's just to show you, like, hey, if it was going to happen, this would be a pretty random occurrence. It means, hey, still, this is turned up. If I see my stock start to turn down, I might react to that. And then once it actually curls back, up on my chart, or volatility starts to curl back down, I can be more comfortable risking my money again. So that's all I wanted to point out with volatility. As far as risk behavior goes, as far as the dollar, you'll notice that overall from the lows, the dollar is still down, but we saw that start to turn up. And you actually do have a 2-hour, I would say, higher low at this point. You're taking back the 5. So you do have some credibility to pullbacks in the market, a trap being set here, but there are a lot of arguments to say that it being a pullback is the most likely thing. If it's some kind of random drop, we know there's probably a percentage chance of that, but that would be more of a random occurrence. And because we've seen some big drops in the past, maybe we just manage our risk for a bit and see if things turn back up. Right? That might be the safe thing to do, and that's what I'm going to try to display. And we're actually going to do a live video tomorrow for a little bit as the market is closed. We're going to do a little live video just so we can go through these and people can ask questions. I think that's always very, very helpful. And if you want to come in, maybe you're looking at learning this stuff, maybe you watched to this point, hey, and you're thinking about taking the course, hey, come into the chat, ask some questions. People in the chat can tell you how the course has really been helping them. And I think that's fantastic because, you know, at the end of the day, I get it. I'm a horrible guy. I'm selling something for a really, really cheap price. But you want to see if it's helpful. I want you to make sure it is helpful for you. And so maybe hearing that from some of our subscribers will really help you out in making a decision. So thank you for that. Now, these things have curled down on daily charts, and we do see not the best reversal signals from the 10-year yield. So the 10-year yield getting a huge reaction still would be, I would say, a little bit random here. We do have divergence on the 10-year yield here. We do have divergence on the dollar here. So these things happening could just be little pullbacks or something like that in order to trap people again, right? Really take into consideration the fact that for the SPY, these rip downs, people have really reacted to these seriously. These curl downs, people have reacted really, really quickly to the sell button. So that could happen again, but we'll just see if we're able to actually cut this low, or if we're going to just hold up a little bit better, or maybe we're going to go all the way down to a weekly expected move, maybe even deeper, and then curl back up and see some good structure actually to head higher. So we just have to be trading like water, just like always. So the main takeaway for today is this video is about trading like water. We see some reversal signals in the upward direction. We see some reversal signals in the downward direction, and we're really paying attention to our stock. We're really paying attention to how people are moving their money so that we can make the best decision. And sometimes that decision might be, hey, I might need to get out of this for a second, wait for it to chill out a little bit, and then wait for it to look good again. And I think that's a big thing that people need to hear. These have been great trade setups. We've made money pretty much every single bullish setup. We caught every single run here. That's fantastic. And now we're just paying attention to, hey, we're breaking through. So can we hold up better this time, or are we going to take out this low and see something bad? So that's what I'd be paying attention to this week. Thank you guys so much for watching. I really do appreciate it. I know, you know, things like this, days like this, charts like this are kind of not the most fun because you're seeing things in both directions and you want an answer. So my answer to you is be accountable, take control of your trades, right? That's a big thing. If I am accountable and in control of my trades, at least nothing can hurt me. If I have a plan for if things go wrong, if this curls down, I'm out, I'm waiting for it to curl back up to be back in. If I have those little plans in place, I feel much more in control. And that's a big part of trading, is just remaining in control and holding yourself accountable for your decisions. That's a big deal. So thank you guys so much for watching. I hope you guys have a great rest of your day. I hope to see you at the live show tomorrow, and peace out.